Welcome to This Explainer. Okay, today we are diving headfirst into literally one of the wildest stories playing out in the crypto market right now. We're talking about the massive absolute breakout of the Unibase token, or UB. We're going to strip away all the hype and just look strictly at the data, the actual underlying tech, and what is really happening behind the scenes.
560%. I mean, just let that sink in. That staggering number represents the 30-day price rally that just transformed Unibase from this kind of low-visibility token into an absolute obsession for the crypto market. Seriously, almost overnight, investor interest in decentralized AI infrastructure just completely caught fire.
But look, you know the drill. Whenever we see a massive surge like this, we gotta ask the hard questions. Is this run driven by genuine, groundbreaking utility? Or is it just another speculative mirage? Are we looking at the foundation of a brand new digital economy? Or is this just another market pump? To answer that, here is our roadmap for today. 1. The massive Unibase surge. 2. Unpacking AI memory layers. 3. Catalysts behind the rally. 4. Red flags in tokenomics. And 5. The future of Unibase. Let's get right into it.
Section 1. The massive Unibase surge. So take a look at how this actually unfolded. Unibase was trading really quietly in this early accumulation phase at around 3.5 cents. Then, bam, a breakout phase pushed it near 15 cents on just massive volume. We're talking 300% plus gains. From there, momentum exploded into an all-time high near 24 cents, a truly parabolic rally. But as we all know, gravity always hits, right? Recently, it's pulled back into a consolidation phase around 15 cents as leveraged traders started taking profits and unwinding. Section 2. Unpacking AI memory layers. So what are they actually building? Well, right now, most AI agents have a severe case of digital amnesia. They're what we call stateless, which basically means they don't retain any long-term knowledge between your sessions with them. Unibase is stepping in to fix this by giving AI agents a verifiable, decentralized, long-term memory. This means they can actually learn, collaborate, and build on past interactions. It's a game changer. The architecture to make this happen relies on 3 core modules. First up is Membase, which uses zero-knowledge proofs to securely store the AI's memory without ever exposing private data. Second is the AIP protocol. Think of this as the standard language that lets these agents actually talk to each other. And third, Unibase DA. This is a data availability layer with massive throughput, over 100 gigabytes per second, which ensures these agents can access that vast memory in real time.
And hey, this isn't just some theoretical white paper fantasy. The network is live right now. They've already recorded over 12.4 million on-chain memory entries, with over 200 active AI agents deployed and actively processing data. That is some serious scale.
Section 3. Catalysts behind the rally. So what sparked the fire? The extreme bullish euphoria really kicked off in May with the launch of the Agent Service Market. This quote from Emilio Crypto Boyan captures the vibe perfectly. This is the first time agents function as autonomous economic actors that can hire each other. This upgrade basically allowed algorithms to execute paid work and hire each other using trustless escrows. It was a massive, massive shift in the narrative. But obviously, a cool narrative needs capital to actually pump, and that arrived via a Tier 1 exchange listing on OKX. This listing introduced perpetual contracts with up to 20x leverage. Suddenly, the token was exposed to a huge base of active, aggressive traders, right at the exact moment capital was already rotating heavily into AI-focused altcoins. It was literally pure rocket fuel. However, we absolutely have to look at all sides here. Contrast that hype with this really severe warning from analyst Umair Rustam. He flagged a major divergence, saying, "Scam alert. Volume just doubled to over $60 million, but the sell-side activity is hitting a staggering 75% on some exchanges." He's raising major alarms about wash trading, large players basically artificially pumping volume to dump their holdings on retail buyers. Now, we aren't taking a side here, but it is a starkly contrasting view that you absolutely need to know about. Section 4. Red flags and tokenomics. This brings us to the structure of the token itself. Analysts are warning about what they call a structural dilution bomb. Check this out. Out of a total supply of 10 billion Unibase tokens, only 25% are actually circulating in the market right now. A massive 75% is still locked up and completely controlled by the team, the treasury, advisors, and the ecosystem.
When you look a bit closer, several glaring red flags emerge from the source documents.
Those locked tokens, they have a 6-month cliff followed by 24 months of linear vesting. That means a steady flood of new supply is going to hit the market very soon. On-chain analysts also noted the team retains active freeze and mint authority, which is a massive centralization risk. Add in a fully diluted valuation, the total value of all tokens existed today, hovering near $1.6 billion, alongside verified phishing scams trying to drain wallets, and you've got yourself a highly risky environment. These risks, combined with basic market mechanics, really help explain the recent price corrections we saw. The downward pressure wasn't just fundamental, it was a technical unwinding. Over-leveraged traders who bought the absolute top ended up getting liquidated. In just one 24-hour window, $1.45 million in liquidations flushed out those crowded long positions, instantly dropping the price down 4.7% to about 15 cents.
Section 5. The future of Unibase. Looking ahead, the project has a really ambitious timeline, moving from their August 2025 mainnet launch to the Q4 activation of their zero-knowledge memory-based layer. By early 2026, they're aiming to scale up to 1 million memory nodes. But the real anticipated catalyst? That's the Q2 2026 release of AIP 2.0, the major upgrade designed to finally enable true cross-platform memory sharing for these AI agents.
So how does all this bleeding-edge tech translate into actual organic token demand? Well, Unibase recently announced a partnership with BlazePay, an AI DeFi copilot with over 1 million users. If BlazePay successfully integrates this memory layer, it could drive real organic transaction demand for the UB token, simply because users and agents will be forced to pay fees to utilize the network's memory.
Ultimately, the future of this asset comes down to an intense, high-stakes tug-of-war. On the bullish side, you've got the immense potential of AIP 2.0 and real AI utility, creating organic demand for memory and staking fees. On the bearish side, you've got the heavy, undeniable gravity of token dilution, with 75% of the total supply scheduled to slowly flood the market over the next 24 months. Which brings us to the most important takeaway of this entire explainer. As you weigh this truly groundbreaking tech against those heavy tokenomics, this is the final question you have to answer for yourself. Will on-chain agent activity actually grow fast enough to absorb all that incoming token supply? Thanks so much for joining me for this deep dive into Unibase. Keep learning, stay focused, and I'll catch you in the next explainer.